the program. Thank you for joining us. Every time I turn around, I'm getting a new news release related to Southern Bancorp, a community development financial institution based in Arkadelphia, kind of Little Rock. CEO Darrin Williams joins me now. Good to see you, sir.
Thank you, Roby.
Haven't seen you in a while. Arkadelphia or Little Rock?
We are headquartered in Arkadelphia, the bank, the holding company in Little Rock.
There we go. All right. You also sit on the Little Rock branch of the St. Louis Fed. You get a lot of insight as to what's going on in the economy, so I just got to ask you right off the top, are we headed into a recession?
Well, thank you for that question. Let me just say, I'm not speaking for the Fed.
Right.
I'm speaking for myself, but I guess it depends on how you define it, right? So, what we think more about at our bank is how do we impact the people who we serve, particularly low wealth people. And while we may not technically be in a recession, depending on the definition, people are feeling the pain. Inflation numbers are they're coming down. What's the price of eggs, right? What are people talking about? What are the price of milk, price of gas? So people are beginning to feel some pain, particularly those on the lower income spectrum.
All right, as the financial institution CEO, do you think that the moves the Fed has been making, do you think it is course correcting where we've been headed? Well,
the Fed's trying to get inflation at 2%, and it's not. The last time was 6.41%. Right. So if you've got to drive that inflation number down, you probably got to keep interest rates up much above where they are now for a longer period of time. We'll see. We'll see.
All right. Well, play it out for me a little bit. You guys have done a lot with Southern over the last, I would just say the last year. I've gone back and looked at some notes. You closed on a new bank acquisition. You partnered with Regions on a big ATM kind of move across your footprint. You've moved into an underserved area of Little Rock with some of your space, and you've received some new market tax credits. You can take any one of those and tell me, where are you taking this financial institution?
Well, you're right. We're doing a lot of things. We're growing. We serve everyone, but a real focus on serving underserved people in places. And so really excited about being here in Little Rock. This is our largest market. We primarily serve rural communities, South Arkansas, East Arkansas, West Mississippi. And with the Little Rock branch, this is our largest market. We're moving in the 12th Street corridor, right in the city's own substation. There's not a bank within, blocks or miles around that area. And the communities for years been asking for two things. They want a grocery store and they want a bank. We got them a bank, and I'd love to finance a grocery store. I'd love to finance one.
You're not going to get in the grocery store
I don't mind financing one, though, if we can. We're trying to find one, but I'm excited. We've been open for just a few weeks, and the reception has been wonderful in that community. People are coming in, they are bringing us money to deposit, they're opening up accounts, and we really want to help to continue to revitalize that area. A number of people have put really work into that community. The government's put the substation there, Hillary Clinton's library is there. Private sector needs to step up, and so we're stepping up, and hopefully we can help finance the change we want to see in that neighborhood.
So when you serve underserved areas of the community, whether it's here in Little Rock, whether it's in some of the other parts of the state that you mentioned, you're talking about people that don't kind of trust banking services. They haven't done the traditional banking thing, so they either are dealing in cash or they're dealing in maybe somebody locally that's not FDIC insured. Right. Talk a little bit about that universe of people that you are trying to serve, and what brings them into a financial institution.
Yeah, so unfortunately in Arkansas, about almost 16% of Arkansans are either unbanked or underbanked, meaning if they're underbanked, that means they may have a bank account, but they still use high-cost services like petty lenders or pawn shops, or they may use money orders or things that strip wealth from them. And so we work hard to meet them where they are. We work hard to, we have wealth advisors. People say wealthy people have wealth advisors. People who may be low wealth also need wealth advisors. So we have credit counselors, home buyer counselors, and we try to meet them where they are. We try to develop products that meet their needs. And when we entered Little Rock, we did focus groups. We walked the neighborhood. We asked them, what do you want? What type of services do you want? What type of products do you want? And we're really trying to craft our products to meet the needs of that market.
The Premier acquisition, tell me a little bit about that. It's a small bank, but I mean, what did it do for you?
Outstanding group. One, we just added a number of new team members, and excited to be in 3 new markets: Jonesboro, West Memphis, and Marion. It's about a $200 million acquisition. In fact, this coming weekend, we'll finalize the conversion. You'll start seeing signs switch from Premier to Southern, so that'll be exciting. We've got 33 new team members, and we've got $200 million more in assets and 3 new markets that we're excited about being in.
Tell me about new market tax credits. People, they've been around for a while, because I think when you were back in the legislature, that's really speaking a long time ago. What, a decade ago?
That was a long time ago.
It was a long time ago. These were kind of first introduced as a potential financing tool. What do they allow you to do?
Yeah, so the new market tax credit program, which is administered by the CDFI fund out of Washington, D.C., highly competitive program. And Southern has been successful in the last 3 rounds. So we've gotten $145 million in new market tax credit allocations. And those allocations, we use those allocations to invest in projects that just wouldn't happen without the equity, without the injection of capital. And so we're excited about a number of the projects that we're working on.
Give me one illustration of how you use new market tax credits to make a deal work.
Yes, so for example, we just broke ground, UAMS just broke ground on the new Children's Center, another investment in the 12th Street corridor. It's a large children's center. They're going to, of course, provide assistance for the folks who work at the parents of children who work at UAMS, but also for the neighborhood. And so there was a little gap in the financing. There was not enough money to make the deal work. We're able to sell those credits, inject that equity into the deal to make it work, and it closed the gap. It closed the gap in what was not a deal that wouldn't happen but for some equity injection.
How do you make a buck off of that?
Well, we make a buck off of that because, well, we're in a couple of different sides of the transaction. We do sometimes we may be the leverage lender and actually may finance some of the deal.
Right.
But we also we make various fees throughout the process. There's a significant compliance period to make sure these work. And so there are fees and there are also interest.
All right. You are a big supporter of diversity, equity, and inclusion. You talk on a lot of panels, a lot of time about that. We've seen a lot of pushback in recent months, the last year, maybe 2 years nationally. Certainly seen it here in Arkansas at this legislature. You've got push to not allow ESG type investments going forward. You've got, which is environmental, social, and governance deals there. We've got the affirmative action bill that's up there at the legislature. Tell me why the critics are wrong about why DEI is a smart way to move.
Well, I think you just look at the numbers, right? So McKinsey & Company, global company that does a lot of research in this area, McKinsey says that those companies that are more inclusive, that are more diverse, are 36% more profitable. And this is not just in America, this is around the world. And they say that millennials want to work for companies that are more diverse. And if you look at the changing population, the changing demographic, baby boomers are about 75% white. Millennials are about 50% white. And so you see the world's becoming more diverse. And so people are expecting to be more included. And companies that are more inclusive just make better decisions. And they're more profitable, according to McKinsey. So I think it's a smart thing to do.
Are we going to see you up in the legislature testifying on one of those bills at some point in time?
We've got a lot of work to do at Southern. So I'm going to stay at Southern, continue to work. Again, while we focus on serving underserved people, places, minority communities, we focus on serving everyone. Our focus is about being wealth builders. The Business Roundtable, 200 of the largest businesses in America, they want to advance racial equity. So Doug McMillon, who's the CEO of Walmart, in 2020 led a special committee of the Business Roundtable. Again, 200 of the largest businesses in America. And they're doing their part to make sure that businesses are thinking about diversity. It's good for business. And so I think it's just a good thing. You won't see me testifying, but I'm happy to talk to anybody if they want to talk about it.
He's Darrin Williams. He's the CEO of Southern Bancorp. Always good to catch up with you, my friend. Keep doing the good work.
Thank you.
All right. We're back with more right after this.